If you have a transition in your life, you get married, or you have a child, or you change jobs, or you're about to retire, well, life has a lot of transitions. That's generally a good time to speak with a financial professional. And there are few transitions that impact our financial lives, truthfully, our entire lives, as much as divorce. My name is Jeffrey Drayton. I'm a certified financial planner professional and certified divorce financial analyst practitioner. And today I'm speaking with fellow CFP and CDFA pro, Julie Quick. Stay tuned, everyone. Today's conversation, financial aspects of divorce, things to know, and pitfalls to avoid. A conversation with Julie Quick coming up. It's Jeffrey Drayton, founder of the Jeffrey A. Drayton Financial Group. If you're watching this on YouTube, go ahead and subscribe. And if you are viewing this from my website, fill out the sign-up form at the top of the blog page so that we can contact you when new content becomes available. Today, I have the chance to speak with fellow CFP pro as well as certified divorce financial analyst and founder of the firm Cultivate Financial Wellness, Julie Quick. We're talking about critical things to know when going through a divorce, as well as some pitfalls to avoid. Hey, Julie, it's great to see you again. Thanks for joining me today.
Hey, Jeff. Thanks so much for having me. I'm so thrilled to be here.
Well, I'm thrilled you could, Julie. I do a workshop for divorcing clients. I know you do the same. I'm certainly not going to ask you to try to fit your entire presentation into this vlog, but let me ask you this. If you were to tell me what you think is one of the top priorities, or should be one of the top priorities for going through divorce, what would that be?
It's a great question. One of the first things that I do with clients is help them to prepare a detailed spending plan. I find that a lot of people that come to me after divorce either had not spent enough time doing this task, if they even spent any time on it at all. But really, it serves as the foundation upon which a variety of questions can be answered throughout the divorce process. Questions like, will child support payments cover my child's actual expenses? Can I afford to keep the house? Will the proposed spousal support cover my bills? Or do I need to get a higher paying job or get additional training so that I can get other employment?
Julie, I totally agree. So a client working with you, how do you go about answering those questions?
The best way to effectively answer these questions is by having an accurate estimate of what life will cost post-divorce. I like to start by first assessing current expenses. And it never fails. A lot of people are able to rattle off things like their car payment, their cell phone bill. Those fixed recurring expenses are pretty easy to determine. But it's really important to also consider expenses that may not be paid on a regular basis. Things like your car insurance that might be paid twice a year, or property taxes. And then it's really important to come up with good estimates for expenses that are more variable, things like groceries and gas.
Yes, those are the challenges in budgeting, what I would call the nonlinear expenses. Keep going.
And I always like to remind people, small expenses add up fast, so don't discount things like gifts or entertainment or the multiple streaming services that you have, or of course, your favorite drink at Starbucks. For this reason, I really like to use budgeting apps, things like mint.com or the tools that are often included in financial planning software that you and I like to use.
Super. We get a budget or projection done. Where do you go from there?
So that's a great starting point by looking at current expenses. But two households invariably cost more than just one. So it's a given that there are going to be new and changes to those current living expenses. The next step is to brainstorm what those new expenses might be, those expenses that you may not have incurred while you were married. These might include home maintenance, additional childcare, and of course, health insurance is another big one. You'll also want to think long-term and anticipate big ticket items like eventually replacing your vehicle, major milestones for your kids like high school graduation and college, And then finally, a lot of people tend to forget about things like taxes and inflation, but these can have a huge impact on our cash flow over time. And this is where working with a certified divorce financial analyst, Jeff, comes in, because in addition to help you preparing the spending plan, we can actually project it out into the future to illustrate the impact that taxes and inflation have and help determine your ability to cover the expenses, not just the day after divorce, but well into the future.
I couldn't agree more, Julie. Now there are 2 households instead of 1. That's going to cost more to maintain. You know as well as I do, whatever your tax status is on December 31st, as far as the IRS is concerned, that's your status for the whole year. So the year after your divorce is final, you're going to file your taxes for the previous year, not married filing jointly, but likely either filing single or possibly head of household, which could mean that at least proportionally, your taxes are going up. So yeah, potentially greater expenses and maybe less resources to pay them. So definitely getting a spending plan needs to be a top priority. Julie, there are a lot of contentious issues that come up in divorce. Let's talk about something that comes up in our field, say around the division of assets. Do you find that there are any assets or maybe an asset that is particularly difficult for couples to agree on? Or maybe it's just a place where things sometimes go wrong?
Yeah, that's a really good question. I find that in many divorces, the biggest question is who gets the marital home. The family home is really a hot topic because number one, it's often the most valuable asset. And number two, there's a lot of emotion and memories tied to the home.
Exactly. It probably affects school districts for the kids. What do you see as possibilities for dividing the marital home?
There are generally 3 options for the marital home when it comes to divorce. The couple can sell the home and split the proceeds. You can have one spouse keep the home while the other spouse gets other assets of equal value. Or 3, both spouses continue to co-own the home while one of them lives in it and then plan to sell it at a later date. And really that's common in a situation where there's children and they need to remain in the same school district. I find personally that many of my clients want to keep the home. Often this is to provide some semblance of normalcy for the children. But if you want to keep the marital home, you must understand 3 things in advance. Number 1, can you afford the mortgage, insurance, taxes, and maintenance before you sign on the dotted line? If you're awarded the home and then find out later that you actually can't afford it, you may be forced to sell the home sooner than you had anticipated. And then who do you think is responsible for paying closing costs and sales commissions? So this decision could really cost you. Number 2, to keep the home, you'll likely have to give up other more liquid assets of equal value. So the question is, what will your future look like without those assets? I have a former colleague who used to say to people, you can't eat a house, meaning it's hard to buy things like groceries when all of your money is tied up in your home.
Yes, that's exactly what I frequently point out. The equity in that home might represent a big chunk of value on the balance sheet when doing the property division, but how accessible are those dollars down the road if cash flow becomes tight? And what else would you say?
And then finally, Jeff, if you're going to keep the home, be sure you address the mortgage before your settlement. So a judgment of divorce can assign a debt to either party. However, creditors are not required to acknowledge the divorce decree. They can and they will continue to treat joint debts as joint debts. They won't just simply remove one of the names. More than likely, the mortgage will need to be refinanced. And this can pose a big problem if the recipient spouse has little to no credit or income history. So a lot of good pre-planning is required in order to make some really good decisions.
Julie, that is so much great information. I mentioned it before, but I want to say it again. Your firm is Cultivate Financial Wellness, and you are located in the Detroit area, just outside Detroit in the city of White Lake. What's the best way for a person who is either going through a divorce or maybe knows someone who is to get in contact with you?
All of my contact information can be found on my website, cultivatefinancialwellness.com, or feel free to call me directly, 248-963-1223.
Thank you, Julie. It was great talking with you today.
Thanks so much, Jeff. It was fun.
Hey everyone, as always, nothing in this video is meant to be specific advice for you. Advice like that can only be had by working with a financial planner, someone who knows you and your situation. I would encourage you to seek out someone who is a certified financial planner. This is signified by the letters CFP with the registered trademark sign following his or her name. I would also encourage you to work with a fee-only financial planner. Last two words, fee only. Not fee-based, not fee plus commission. Both of those terms mean that the planner or advisor can receive commissions and is therefore not free of the conflict of interest inherent to commission sales. Again, I'm Jeffrey Drayton. Thanks for watching.